Hey everyone, Couch Investor back on our earnings video for you today. So let's go over Sea Limited's earnings report. Now, Sea Limited was another high-flying stock during the pandemic, whether it's because of the rise of Shopee, their e-commerce arm, or whether it's because the profitability and the popularity of digital entertainment site Garena Free Fire. Of course, there is still Sea Money. That's still a small part of the overall business. And so, coming out of the pandemic, Shopee's profitability continues to be a lag on the business, and Garena Free Fire's popularity comes down as well, and so did its profitability. Now, since a couple of quarters, suddenly the company has focused way more on the bottom line, and so growth has slowed down a little bit, but profitability of the business has become much better. Now, when it comes to a beat or a miss right now, I've read some conflicting reports whether it's a small beat or a small miss when it comes to EPS. So I'm not going to touch on that, but that might be one of the main reasons why this stock is down around 10 to 11% at the time of making this video. Now, let's have a look at what management had to say. I'll also show you some projections for fiscal year 24-25 and the graph at the end of this video. So, first up, Forrest Li, the CEO, says in the second quarter of 2023, we delivered strong results building upon many of the key initiatives we shared previously. In the past couple of quarters, we have not only achieved self-sufficiency, but also demonstrated the profitability of our model and our ability to manage fast and significant shifts in operational focus as we see fit. Given this, we have strengthened our execution capabilities and increased the stickiness of our ecosystem. We believe we are now on firmer footing to better serve our communities. Meanwhile, the economies of our region have remained resilient, and we are excited to see recent ecosystem developments in the growth of diversified user engagement through live streaming, short-form videos, such as TikTok, by the way, and affiliate programs. Such developments offer us further opportunities to grow and expand our long-term profitable addressable market. Given these positive developments and trends, we have started and will continue to ramp up our investment in growing the e-commerce business across our markets. We believe that the efficiency gains and stronger footing we have achieved through our past efforts have further strengthened our ability to invest efficiently in growth. As we accelerate investment in growth, our strategic focus to build cost leadership and continue to improve user experience remains key to our long-term success. So maybe some of the question marks is right now, well, you're going to reaccelerate growth. Is that going to happen at the expense of profitability? They say they've got everything under control. Of course, uncertainty is not the market's best friend. Now, when you look at current valuation, PE for the next 12 months, actually, if you look at fiscal year 2024 EPS there of $3.57, you're paying around 14 times or so the price today if it sits at $50. Now, they expect close to 27% growth in fiscal year 2024 when it comes to EPS, 14% growth when it comes to sales. Then in fiscal year 2025, 11% growth for sales and 26% growth for EPS. So again, here we see more growth on the bottom line than at the top line. Things can change very, very quickly if interest rates get cut at a fast pace. Because right now, with interest rates extremely high, everyone is going for the strong growth at the bottom line. They want to show the market, look, we can be profitable. Here it is. These are the results. When interest rates will drop, you will see a lot of people start to reaccelerate growth at the top line. And this is something that they should do, right? During a bull market, you would like to see top line growth. During bear markets, you would like to see profitability, to see that you can operate during difficult times as well. And so let's start with total GAAP revenue that grew 5% year over year, basically remained flat quarter over quarter to just over $3 billion. When you look at adjusted EBITDA, huge improvement year over year, and here also quarter over quarter, it's basically flat. And here again, we can see that the focus on profitability is real. Now, what you can see is this darkish blue, right? That's the digital entertainment side. Adjusted EBITDA there has decreased year over year. Now, when it comes to cash equivalents, they have increased that position from 7.2 billion to 7.7 billion. So the bottom could have been here Q4 2022, 6.9 billion. So we've increased it almost by 1 billion 2 quarters later. And now, if we look at Shopee, the e-commerce side of the business, GAAP marketplace revenue increased 28% year over year. Quarter over quarter is basically flat as well. I think it was $1.8 billion or so last quarter. So you can see the value-added services increased 11% year over year, then the core marketplace 38% year over year. As for adjusted EBITDA, here you can see the huge improvements. Asia markets adjusted EBITDA went from negative 316 million to positive 204, and then the other markets close to break even. And now the big slide for me here, it's not so much a mixed results because there is more positive than negative, but still, if you look at digital entertainment, the bookings here, that is still decreasing quarter over quarter by 4%. But if we look at the other two things here, quarterly active users, we might have bottomed out in Q4. We're up 11% quarter over quarter now, so that's 2 consecutive quarters of an increase there. Let's see if that trend continues. And then quarterly paying user ratio has finally increased as well from 7.7% last quarter to 7.9%. Of course, still a long way to go to get back to that over 9% ratio that we had previously. Then looking at the C-Money side, so digital finance services, GAAP revenue increased 57% year over year. A nice little growth quarter over quarter as well. Total loan receivable was $2 billion net of allowance for credit losses of $278.6 million. And again here, non-performing loans past due by more than 90 days as a percentage of total gross loans receivable remained stable at around 2%, so nothing changed there. As for gross profit, you can see the year-over-year action here again, 33% growth there. Quarter over quarter, I think it was 1.4% last quarter, so 1.5% this one. The trend continues. And as for the cost and expenses, things are always getting under control here. Year over year, everything remains down. Quarter over quarter, there are some segments that have increased just a tiny bit, but overall not such a big deal there. So that's what you like to see, of course. Now that they will maybe focus more on top line growth, let's keep an eye on what happens with the expenses. So overall, net income here again, it is positive, same as last quarter, but this time $331 million. Yes, of course, when we looked at adjusted EBITDA, which was over $500 million, there is also a nice little chunk here of stock-based compensation, 179 million, but it is still lower than last year. And so looking at the graph, of course, it all depends what happens throughout the day. For now, futures don't really look that bullish to me, but if it stays around that $50 mark or so, we are back at around that support-ish line we were back in October 2022 and December 2022 as well. We got a nice little rebound there. Right now, if you are looking to accumulate or open up a position, probably wait until it reaches that area, maybe bottoms out as well, so you get that signal from the market. Overall, MACD is bearish, RSI is pretty neutral currently. Of course, when the market opens, you will see it go a bit lower. And so to conclude, to me, if you disregard the stock's reaction, you just look at the report looks good, right? Things are trending in the right direction. They're also hinting for more growth in the future while controlling the costs. Of course, that remains to be seen if they can deliver on their promises. But currently, the market is just in a weird mood in the last couple of days, so you get those heavy reactions here, down 10%. For me, that was not such a bad report to get a down 10% pre-market. But of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye-bye.